And with your experience of 6 years working as a realtor, what do you think is the main challenge that people face when they're buying their first property? Is it saving the money for the down payment, $100,000, $200,000? Is it qualifying for a mortgage, especially now that the interest rates are so high? Or is it making the monthly payments of the mortgage?
Yeah, it's a really great question, and it's pretty subjective depending on who's asking you, but I'm just going to do the avatar as someone trying to buy their first home, right? So if you're trying to buy your first home, getting into the market financially isn't always the hardest thing, primarily because if it's underneath $1 million, you can get away with putting 5% down. And that's pretty affordable for them. I'm going to say the average audience to save enough money within, let's call it a 12-month span. Or, you stay at your parents' house, you stay with friends, family, have really low rents and try to just stockpile money to the side, even if you have a pretty low income, right? The next piece is the qualifying. That is hands down the hardest thing for a lot of people, especially if they're coming in with student debt, car debt, credit card, consumer debt, whatever the case might be. It's very hard to secure financing when rates are so high. It's not just the rates, it's the qualifying rate that's even greater than the actual interest rate onto the mortgage. That's a bit of a challenge for some. And then coupling that with, even if they can qualify, they realize, oh my goodness, look how expensive these payments are going to be. I'm almost better off just renting because now I'm not house poor. So I think those are the challenges together. I would definitely say it's coming from the qualifications and then what my life's going to look like. I don't really think it's necessarily the savings perspective. Those are the two things I would say are the biggest challenge for people.
Okay, so let's talk a little bit more about the number 2 challenge, which is qualifying for a mortgage.
Yep.
In many countries, especially in the third world countries, you buy homes with cash. You either have the money to buy the whole thing or you don't, because financing is so risky and their interest rates are so much higher than in Canada, for example. So this is actually something that I only realized in Canada. I can buy a place with only 20% of it, 25% of it, or you're saying 5%?
As little as 5% under $1 million.
How is that even possible?
Right.
But then qualifying is another thing that people will not imagine what it's like in Canada if they haven't been to Canada before. Can you explain that process? How does a person walk into a bank and get a loan to buy a house, and what do they have to do in order to qualify?
Yeah, so I would say the number one thing is you want to get connected with a real estate agent. That's your first thing. And the reason I say that is a good quality real estate agent has either a mortgage broker or a bank or some level of a lender that they can suit you based on your situation. And they're kind of the concierge connecting you with that right lender that fits your needs. And essentially what you need is you need to have income to some degree. You need to have proof that your income is going to be consistent. And you need to be mindful of your debts. So what the bank looks at is saying, hey, let's say you make $100,000 a year. Of your total $100,000, they have a rubric saying, we won't let you be in debt more than, let's call it 32% directly towards your mortgage. Therefore, you can't have more than $32,000 a year for your mortgage, and then divide that by 12. And that's going to say this bank will give you this much money to buy a home of $500,000, $400,000, whatever the number might be. Now, there's other debts that are taken into consideration. So if you have student debt, credit card debt, or if you bought a car and have a huge lease payment, it's going to directly deteriorate how much the bank can lend you. So I would say to everyone, what the process looks like is try to have your income to be as solid as you can get it based on where you are. Try to be mindful of all the debt load that you're taking on. And when you get qualified, your goal to get the home is to have as little debt as possible. Take your mortgage debt, because here's the inverted. If you have a mortgage and you want to go get a car, they're a lot likely to still give you that car debt on top of your mortgage, but the banks are far stricter than any secondary lender on a car or even credit card debt or whatever the case might be from that perspective. So I would encourage people that the process looks like getting connected with a real estate agent. You're going to get pre-qualified by a bank, mortgage broker, or lender, and they're going to kind of outline what you need to do to prepare yourself and try to keep your debt load servicing as low as humanly possible.